Morning, everybody.
Good morning.
Hope you guys.
Morning. Good
hope you
morning.
guys doing well today. I see
Yeah.
Dan's got his Tennessee sweatshirt. Go Vols.
That's
As
right.
always.
SEC conference championships this week, so we'll be excited.
That's right. That's right. Yeah. March Madness is upon us.
Oh yeah.
Dan, you're Dan. Matt, how you doing in Indianapolis?
Good. Walking and talking. I feel like a little bit of sense of deja vu because I feel like it was just the other day we were like, oh, market's down 70, market's down 80.
Yeah.
Looking at ES, ES is down 70, ES is down 80. It's just another day.
It's funny how you get used to this stuff. I remember during COVID being at my desk and just working in the afternoons and kind of looking up. And it was like the third day in a row of like a 300-point move in the SPX. And by that point, your brain's just so fried. You're like, well, that's sure.
Okay.
Makes sense.
Yeah.
You get numb. It's like, you live on the west side of Chicago after about the 12th shooting in a week. I used to get, in Chicago, it'd be like in July when the weather's nice and all the gangbangers are out because it's nice weather.
Yes.
And you'd see like some crazy numbers like, 35 shot. 20 day, but unfortunately you get numb to it. Oh, it was only 20.
That's right.
It's crazy, but
yeah, on any given day too. I mean, like if if we had a 300-point move last July or something, like some random day, you're sitting here being like, oh, markets and CNBC's putting markets in turmoil up on the screen.
Right. Oh yeah.
And they're going from there. But listen, guys, this is the point. I mean, this is our second week of the show. Last week was awesome. We clearly are causing this. There's the correlation.
We're still going, though. We're keeping going. Show must go on.
Sorry, guys.
As long as we'll be going, the market will be going down. So we're going to write it down.
That's right. Some of the comments I've heard have been, guys, this is awesome. We're very thankful you're doing this. Hey, but this is like a professional show. We really want to see you guys like up the production value. So with that being said, I worked really hard this weekend. I used all of my skills as a graphic designer, and I've come up with the show intro. So you guys ready to start the show officially?
Yes.
All right. Okay, here we go.
Let's go.
Here's the thing.
Every morning at 8:45 Eastern, optional makers got your back. Troy's dreaming big like LeBron. Mass back testing like a daddy Mac. Dan's 30 years got our way. Trading life and markets every day. Option on Vega, you're traded home. Where every move makes you feel less alone.
All right.
I don't know if I could, Matt. I don't know about you, but I don't even know if I could say. I mean, that was just like above and beyond.
There's no
words.
No words sum it up.
No word.
Truly,
Troy, that was even for you. I mean, I have high expectations for you. That went over. That was just.
Thank you.
I want to know who the voice was. That you? Who was the singer? On that? Can you disclose that?
That was a computer singer, Dan. Computer generated.
No, are you serious?
It was, but I did add. I don't want to get in trouble copyright, but I did add a filter on it for my favorite artist, and you can reference last week's shows to talk about my favorite artist.
BD.
So
BD.
BD. Yeah, there's a filter on it. But anyway, so we're official now. It's a real deal.
Wow.
Let's jump into the zero DTE rundown.
Wow.
So, two things this morning. Number one, it came out this weekend, and many of you will be glad to hear that President Trump doesn't even look at the market. Doesn't even look at the market, he said. So people asked him, what's going on in all of this madness? And he said, I don't even look at it. Now, what's funny about that is I think that you can find an old tweet from him where there was two days down at some point in the last 4 years of 1,000 points, 2,000-point days. And he said something to the effect of, any president who lets the Dow drop 1,000 points 2 days in a row should be fired.
Oh, did he say that? That's awesome.
Yeah. So now, to his credit, I don't know.
It's a famous tweet. Yes.
I don't think we've dropped 2,000-point days yet in Dow. So, he's still good on that end, but he clearly watches the market, right?
Absolutely.
He clearly watches the market.
Yeah, I think that tweet is actually a famous tweet. I think that one's fake news, but it is a huge contrast from the first term where he talked about the market incessantly, and this is a very different experience.
Yeah. I have two quick comments on that thing. Number one, I would say he's a New Yorker, right? The New York Stock Exchange. He's a businessman. He pays attention. But the second thing, when I was in the trading pit and someone would come in the morning and they'd say something and you just thought that was preposterous. That was just crazy. They would just say, they wouldn't even say, I don't believe you. They just say sold, right?
Yeah.
Sold. So the only thing you could say to this comment is sold. That he's not looking at it. Yeah. And I wouldn't be shocked if he came out and gave a 10-minute oration today on the market and the idiots behind the selling and all this, but sold. Yeah, definitely.
Yeah. He's that guy when the market goes down and he's in charge. When he's in charge of the market and the market goes down, he would say, like, this is a generational buying opportunity. Like all the crypto guys the last 18 years or whatever.
He's going to encourage all the crypto people to come in and buy stocks.
Yeah. I don't even know where Bitcoin is. I mean, I know Bitcoin's gotten wrecked the last couple of days. I don't know.
It's at 83.
Okay.
It's up here a little bit recently.
A little bit today.
Yeah.
Okay. Anyway,
general,
so that's that.
Yeah.
That's that. Number two, we got data this week. So CPI is the big one Wednesday, guys.
Yep.
Any thoughts about that? In this environment where we have crazy large candles right now, I can't imagine it's suddenly going to die down.
Right. Well, yeah. This is the 100-point candle phenomena, right? For a couple of weeks, and so with two big data points, the CPI, PPI this week, that'll at least it's like keeping logs in the fire. It's going to keep this thing going. Right, in terms of potential, whipping around back and forth. No,
that CPI. So CPI Wednesday, and then PPI Thursday, and then Matt, you said JOLTS tomorrow.
Yeah, JOLTS tomorrow, and then consumer sentiment on Friday, and I think in a normal market JOLTS and consumer sentiment are a lot less important, and they're probably less important in this market than CPI and PPI on Thursday. But still, it's in these times when VIX is around 25, it's like all the headlines just going to feel like they have a microscope on them.
Well, and the biggest news, right, would be, even more than PPI, CPI, if there's any real juicy things going on, because the tariffs are a recent catalyst, and anything that comes out of there, if they show Trump and somebody from Mexico or Canada, maybe on the beach having a margarita, celebrating, that might be 100-point swing one way or the other. I'm not sure which way that would go on there. But Troy, a couple quick things if I could throw in for the market real quick. We were discussing, Matt and I and Troy, before the show about the 200. First, one thing on the 200-day moving average in the SPX, which is around 57.30, 57.33. It's just interesting. Last week we never closed under it, but if you look at, I believe Wednesday and Friday, we were. Let me see if I got it here. Wednesday and Friday, we were well below, right? Well below the 57 30, and then we rallied up huge, right?
Yeah.
Way off the lows, which was a big deal. But the one thing that hit me as I was looking at this a little bit over the weekend, if you think, and this is where I think people get absolutely crazed and nervous with the downside for good reason, is if you look, it's taken basically now where we'll open, we'll be down around 7% or whatever off the highs of Feb 19. So it took 2.5 weeks to go down 7%, right? So I just thought, and that's about 470, 480 points. So then I thought, oh wait, it took 2.5 weeks for the roller coaster to go down. How long did it take the roller coaster to go up 470, 480 points? And you're talking like 4.5 months. If you look back with the lows, it took 4.5 months to go up 470, 480. It took 2.5 weeks for it to go down. So that's what gets people crazy. And that's really where the downside, how quick some of these things happen. If you look at the COVID correction, 5 weeks, right?
Oh yeah.
5 weeks, 800 points. Hello, how you doing? Boom. It's over with. The other thing is VIX. Again, you haven't seen the panic here. I mean, the projected VIX is open around 26 or something. But this 26, the high Friday was 26.56. So unless we kind of go in that 28.30 or higher, there's no panic. I mean, 26 is high, but it's not that outrageous. If you look at the typical range the last 12 months in VIX, might be 12 to 21. So 26 isn't like, goats are falling out of the window or something. It's
no, that's
under.
Right.
And the other thing, what's the other last thing? I think that's it. The other thing was, I can't overemphasize. That's good English. Overemphasize two things. One, size is important in terms of, in the market. By doing less size than normal on certain trades is one thing. But the other thing is, don't look at, we all look at things from our own viewpoint, from our own experience. I'm a guy that would just do a few covered rights, or I'm a guy that would just do a few butterflies. And there's nothing wrong with those, but look at those strategies in lieu of, you're in Chicago and it's, it's sunny, suddenly it's 16 inches of snow. You need to tweak things a little bit. And the bottom line is, what is the market giving you? You have to look at, is there a trade that you're comfortable in this market with the 100-point candles, the high IV, and if there isn't, you don't do it. But there are things that are working in this environment, right? And Troy's going to show one of them.
Yeah, that's right. Well, so to the point, let me do this. The first thing I wanted to talk about, and now people can argue about this all day. I'm not making a stake in the ground, but this is kind of something just that's interesting to me. One of the ways that you can do expect and move for the day is using deltas, and our data, we start showing it at 9:32 because of the wonkiness. So this isn't going to be perfect, but for what I want to say, this I think is helpful. So this is if you sold the 16 delta strangle, 16 delta strangle, 0 day at 9:32. Okay, this options involve risk. This is not a strategy I would ever use. This is not a strategy at all. This is only to show something interesting to me. And basically, I'm ignoring margin requirements. I don't care about any of that stuff. I'm doing one contract, blah blah blah. I'm not really even using blackout days here. So just for the sake of this, just to show you, and I want you to look at something interesting from the P&L chart. Again, this is very unscientific, but I think it's interesting. If you look at since the SPX daily, so May 1622. If you look at how selling the 16 delta strangle has worked for you, you've had some ups and downs, but it's been kind of what you would expect. Some days there's a drawdown. Some days we close outside that, because the whole point of it, 67, 68%, you would expect to win. I don't even trust this because this is unscientific. But what's interesting is if you look at the P&L chart by itself, the last 3 months coming out of that August 5th kind of massive move, where vol exploded, you had some great range bound trades. It was working really, really well. This year, you can see you would have had a massive drawdown in selling this, just because the candle size. And I'm not saying anything profound, but when you visualize that, that's a really easy way in my mind to visualize, hey, coming out of a vol environment, a super high vol environment, which we will eventually, because vols mean reverting, those are great opportunities to sell range bound stuff. Dan, you have any thoughts about that?
Yeah, I mean, I think my thought, in terms of selling high volatility, right?
Yeah. Well, kind of like waiting till, you don't want to sell at 80 VIX necessarily. I mean, some people would, but waiting for when you switch. It's like right now we've kind of switched to a higher vol environment. And
yes.
You can see that coming out of a high vol environment, a lot of times those coming out periods are very good opportunities as vol's coming down.
Well, and you made a great point. I mean, to me is this, do you want to sell just high volatility? And I think you just alluded to this randomly. No, because, the COVID correction, you could have sold 20 vol, 30 vol, 40 vol, 50 vol,
That's
and
right.
you run out of money at 60 vol. But here, You're right. When it looks like it's kind of stabilizing or it's kind of turning a little bit, right? It's like, I think that's fine, especially for like short strangles, right? You have short strangles, but because you have both sides. So you need some two-way, I think. But yes, I think you'd rather wait till a little stability, give up a little bit of the high vol. Like I'd rather sell vol, if you said, would you like to sell vol at 26 here? No, I'd rather wait till 24.
That's right.
And the market stabilize, then 26 with the other side of the coin, we could be at 35 the next day. Now, from now that's two-way. You're talking with the short strangle, which is a good one. But then, someone could also say, well, how about just a short put, right? That I think, but I think it's the same concept, unless you're scaling, right? If someone said, I'm going to do a put credit spread today, I'd have no problem. But I would rather, let's say your limit is you're going to do 3 contracts. I'd have no problem doing 1 at the opening.
Yeah,
right.
Sure.
And then scale, whether this is with the 7th, 8th, or 9th inning of the ball game, I'm not sure for the down move. But you can't pick, but to sell 1 put credit spread or to sell a cash secured put in a stock you like or something like that. But I think you made a good point. You'd rather the vol come a little bit down and the market stabilize versus randomly just every time it's up. But anyways.
Yeah, I agree. And I think that's kind of the point I was trying to make, is to say, Friday vol went down, what, 5, 6, 7, 8%, I think maybe, on that rally. Well, and you might think to yourself, the glory days are here again. But you almost
glory days.
You almost want maybe like 2 days of that. Especially the higher the vol, you can afford. There's a fear of missing out situation where it's like, oh, we're rallying. But you have the ability, especially if vol gets to 30. Let it settle 2 days. And it might drop 5, 6 points. It might get down to 25. But all that's going to show you is that vol's coming out, and therefore the markets are stabilizing. And you want stable markets for range-bound trades.
Absolutely, because if you just sell volatility when the VIX is high, when it bounces back, some of the strongest upside moves are following a 400-point decline here. So you could say, well, okay, so I put on a short strangle at the absolute bottom of the market, and we rally 150 points, you don't lose money, but you won't make any because you may gain 5 points of volatility from the VIX decreasing, but your spread has lost money on range bound because you didn't wait till a little bit of stability there.
Yeah, that's right. Matt, any thoughts before we go to the next one?
No, I mean, it's interesting. I think the comment about what inning this is really it's really good. I mean, the reality is nobody knows. It does make me think about that comment about what inning, Dan. It also makes me think about what you said about the 200-day SMA, and that there's been a lot of digital ink spilled about the value or not value of technical analysis and technical indicators. And I think Michael Burry has a pretty interesting quote about it. And he basically said, I use them. I'm not sure exactly why they work, but I think there's something to them because other people think they work, and there's a crowd psychology to it. So it is interesting. If we have we're down 80 points, if we have another strong bounce off the 200-day SMA today, does that tell you something? I don't know. So
yeah, that's right. All right, the last one we're going to look at today is we found this weekend, and this is interesting to me. And before all of you just immediately start writing this down, you don't want to trade this, I don't think. But I'll tell you why.
Pretty rough.
So basically, what this trade is this is opened any time of the day that the VIX moves down 5%. So intraday, anytime the VIX moves down 5% intraday, you're going to put on a 35 delta double calendar. And the shorts are 0 day and the longs are 1 day. And this trade is just to show you the drawdowns possible. We're using 100% portfolio. Never use 100% portfolio one trade. Options all risk. This is just for testing. But, you would be set up really, really well in life if you had been really dumb and traded this year. Now, this trade will absolutely fall off the map as soon as we're down, the vol goes down. And the vol will go down because it's mean reverting. The problem is it's hard, these type of trades, it's really hard to figure out what the toggle is of when to trade this or not. It's you almost have to discretionarily look at this and be like, I'm going to trade this until there's 2 losers in a row or something like that, using some kind of metric to look at it. Because why is this working? Well, let me do this real quick. Let me show you this. This is Option Strat. It's a visualization tool. It's pretty cool. I'm using ES so that we can see live data because SPX hasn't opened yet. But this is basically what it looks like at expiration. This is what it's going to look like when you open it. And right now, usually with these type of double calendars, especially a 0-1, I mean, Dan, your theta on that 0 day is just decaying so fast that normally this is quickly turning into just a long strangle.
Right.
Because
you have
no, you have the worst parts of the 0 day gamma, usually, and then vol's so you're all vol, and then vol, normally it's going to start looking like that. Vol's going to go down, and you're going to get, it's not as good a trade as you think it is. And so a lot of times stuff like that happens, and then you'll have a move and, you lose. Right now, because vol, that next day's vol is staying so sticky and staying elevated, it seems to me like you want to be a long strangle in some ways.
Absolutely. I mean, those have been the MVP of the last week or two. Has been the double calendars, have been one of the, if you said top 3-4, strategies in the last couple of weeks, You'd have to have up there the RICs, the reverse iron condors. You'd have to have double calendars. And I think these double calendars, I mean, if you look at the break evens on a double calendar, I mean, it's laughing at the movement we're having here. I'm joking, but I mean, if you look at like a double calendar with a 20 delta or 22 delta for your shorts, it's laughing at this move. And it's saying, is that all you can do for me? I mean, last week the SPX was down 180. Is that all you got? You know, because I mean, these things give you, I can't even, you know, whether you do a 0-1 double calendar or a, you know, you sell your short 4 days out or 8 days out, they all have, I mean, incredible amounts of room. And like Troy said, the volatility is staying up. You know, the only thing, so they work. I mean, they're working. They've been working. I think the only, it's not that they can't continue, but like Troy said, I would think you have to have some kind of volatility fixer in there if VIX goes below a certain point, or an option Omega, Matt and Troy, that you have that in the Punisher, or is that something with the,
you could do a min VIX, and you could do a couple different things.
Things, but but I mean, it's, why not, you know, keep going on it. But I think the Troy, you know, I think that move of having, for people doing it now, if VIX is down, right, you want to enter it when it's down. You know, at the opening today probably wouldn't be the best point with the VIX jumping 3 points or 2 points. But it's amazing. You know, we don't usually think of long Vega when the market's high, but until the music stops, right?
That's right.
Until the VIX comes down and stuff. But and that was a great illustration. If you want to do that again, Troy, I like that, where you started lowering the volatility. And what it does is it brings in the break evens on each side, and it lowers the curve, the graph. It gives a wonderful, it's like bye-bye. You almost feel like bye-bye double calendar. We'll see you later.
Yeah. And you're looking at, I mean, this is at expiration, but here's the problem, is if vol's dropping, you know, and we're there, suddenly your moves, even the moves don't help you. I mean, vol can really, and to me, that's a good illustration of, just to the point of what we're saying. Final thing I'll say about that, and then we'll kind of let everybody prepare their hearts early this morning for the opening a little bit. But this is that same test ran, the one that had 300,000 MAR. This is the same test ran just the last 12 months. And that's why I said you don't want to trade this. Now, what's super interesting, now you think, well, that's great. That's still a great win. You ain't going to survive a 96% drawdown.
No way.
You know,
and nobody's full porting this anyway beyond that.
That's right. And,
right.
That's right. No one. I mean, people are like, I could hit, but look how much P&L. Look at the MAR. That's a great MAR.
2% capture rate.
Brother, you can't lose. You couldn't lose 2 trades in a row. Like, you don't have it in you. You know. And so, anyway, like, but what's interesting, here's the final point that I thought was super interesting. If you remember, compare that to those short strangle we showed earlier. Look at where the drawdown came. The drawdown came in this trade right about the same time those selling the short strangle really took off.
Yeah.
Now, what does that show you? It shows you exactly what Dan just said. The music's going to stop on this trade. You know, so like, enjoy it if you're trading these long, you know, vol strategies right now. They're paying off for you, but just be cognizant that, you know, vol reverts. Vol, if VIX cannot stay at 26, like, it can't do it. It's not built to do it. It's not meant to do it. So VIX, you know, because what that's implying is a move that is it's implying what we're having right now. And we're not going to have 100-point days every day. You know, it's just not going to happen. So anyway,
Troy, can I make one quick point? And I was just thinking as you guys were talking, you know, another way to look at things in the market here, we're saying, okay, where is, you know, if we could look at, you know, the crystal ball, look out a little bit, where is the VIX going to go to? And then it made me think of 2022. 2022, the range in VIX was maybe 18, 19 low, 31 high. So
Yeah.
we could be in, you know, I don't think anybody thinks the VIX is going to 13 anytime in the next week or two. So if VIX comes out, it doesn't mean if VIX goes to 24, 22, 21, the double calendar and the high vol environment is over. It's just that, you know, we have to see here, because if this is going to be even close to a 2022, maybe we have an extended volatile period. The new range might be, so we were, you know, people were doing long Vega in 2022 all day long at 18 and 19, which still seems a little high, but the range was 18 to 31.
That's right.
You know, so this hasn't played out what kind of show this is going to be yet. Is it going to be
right.
You know, and with the tariffs and all that, that doesn't seem like it's going away quickly, right? So that could be, you know, maybe we could have a 3-4 month range of higher volatility. You know, maybe, I don't know what the range would be, 19 to 26, 20 to 30, you know, who knows, but.
No, I think that's exactly right. That's a really good point, Dan. Like 2022 is a great example. When we say VIX is going to mean revert, it doesn't mean it's going to go to the classic 14, 15 year mean.
Right.
You know, it can stay in a range. It's just that 2022 is the example. It's not going to stay at 30. We know that. And at 18, every time, you know, 2022 is classic because every time it get to 18, we're like, we're back, baby. And it would go back up to 24. That's a weird year, but it happens. We have the data for it. I mean, it's a weird year that certainly, you know, so I think Dan's right. You kind of have to look at this and say, all right, with a President Trump tariff situation, what range are we going to be in this year? And you kind of have to figure that out as you go. But you'll know you'll probably know in the next 2 months what the range is going to be, and then you kind of play accordingly. And if you break out, you play some maybe mean reverting strategies to that range, whether up or down. Or if we continue below, you say, like, I don't remember when that VIX finally broke, but man, when it broke, was it late 22, early 23, below 19? Well, then, you know, all ships are selling. And I know a lot of Theta sellers in 23 really enjoyed that because they can just sell puts. But anyway,
and I like your on the back testing, and that just even something for live trading to have a healthy, when you enter the double calendars, you have a healthy on a day that the VIX is down X amount, right? To make sure you're not whereas you don't want to do these things when the VIX is up, you know, 2 points at the opening or something. So anyways.
That's right.
Thanks.
Yeah, you don't want to buy vol when vol just rose a bunch. That's
No.
the general rule. So, all right, guys. Well, I appreciate you. It was great.
Thanks, guys.
We'll be back tomorrow to another probably 80, 90-day down day.
Yeah, and keep the comments coming on the YouTube. We're going to do a comment response segment at some point. We do read them. They're great. So
for sure.
Bring your hottest Stephen A. Smith takes, your hottest back testing takes, and everything in between.
Yeah.
All right, guys.
All right.
You guys have a good day. See you.
Thanks. Bye-bye.